Go across to Manish Singh, the Chief Investment Officer of Crossbridge Capital. Hi Manish, thanks for joining us here on ET Now. Countdown to the FOMC outcome. Donald Trump can't stop tweeting what he thinks the US Fed should be announcing. Polls are indicating that the verdict on the street is brace yourselves for a rate hike. Has that been factored in by the Indian markets? Could we be in for a surprise? And what is all of this going to mean for the Wall Street?
Well, I would say that, if I was Jerome Powell, I would raise rates today. And that is just in keeping with the integrity of central bank, that you do not respond to when market wants you to or a president wants you not to raise rates. However, having said that, it is definitely that he's going to guide the forward-looking rates down. And largely because of, if you look at two data in the U.S., the housing data is getting progressively bad. We had the housing number that came out again 2 days ago, and that index has now slipped to below 60, I believe, and it was high up at 75 end of last year. So you've had like a year of weakening housing data, and that is really weighing up on the market. And of course, that has been driven by increase in the mortgage rate. The 30-year rate of the mortgage rate is set on the 30-year rate, and these are real numbers that Fed just cannot ignore. Fed's mandate is price stability, i.e. control inflation. The inflation is not running away. So there's no reason for Fed to keep hiking rates. So I would see this as a hike because, you want to see that, you have an integrity and what you have told the market or what the expectations are. But he is going to guide things down lower, and that should help the market, and that should bring back the risk-positive attitude in investors, not least because the sell-off you have seen already has made it worse. And now if the Fed comes and says they're not in the premeditated path of raising rates, then I think that should help. So I would expect markets to recover from here.
But Manish, 2018 has also been a year which has seen a big sell-off by the FIIs. If you do continue to see these rate hikes in the US, which at the same time is on the path of economic recovery, is that another concern that we need to keep having, that FII participation could continue to slim?
So let's look at US dollar. Obviously, the dollar has been strong, and that has been one reason, where the markets have been less favorable towards emerging market given the whole dollar and local currency scenario. So that has kept the investors away, or has made investors take the money away. But this is like there's a difference between trader and investor. So of course the traders are the ones who keep going in and out, and they take advantage of any short-term moves. I don't think the investor's mentality towards emerging market has changed, not in any considerable way, even though you have seen some volatility. So I would not be worried about that. For me, I am more an investor than a trader, so I look at the fundamentals going forward. US is still growing at over 2.5%. I strongly believe that there will be a deal done between US and China by end of Q1, early Q2. And there are strong signs that it is going to happen. That should help a lot. What has really disappointed in general has been a slowdown in China driven by their own auto sector, and that is not helping Europe, and then that is not reverberating around across the world. Besides, emerging markets have to do things that they should be doing. You have seen the inflation numbers are such low in India. You've seen oil prices are lower and then continues to be low. So my view is that, what you're seeing is just a volatile environment, but our dollar is already very strong. The whole street is long the dollar. So I don't think the dollar can get much stronger. It could stay at this level or weaken only slightly unless you have a positive sign in GDP growth globally. But I don't see dollar strength really becomes a big issue as it was this year, which hurt the emerging market.
Manish, it's always a pleasure chatting with you and giving us your insights. Here's an invitation on live television to join us tomorrow as well to decode whatever it is that the FOMC announces, while it'll be quite late night over here, 2 a.m. So look forward to chatting with you again tomorrow.